At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you.
Today, December 1st, 2022. No, the metamaterials spin-off is not a reason to buy metamaterials stock. Metamaterials stock will sink or swim on metamaterials financials, which aren't ideal. Metamaterials is preparing to divest its interests in an oil and gas business. This might actually be an ill-conceived move for metamaterials, which is currently unprofitable. Investors should be highly cautious with metamaterials stock now. Metamaterials, Nasdaq MMAT, stock is in a state of transition, or more accurately, the company is in a state of divestiture. Soon, it will spin off an oil and natural gas business that could have been a significant revenue generator for metamaterials. Besides, the company is having major financial issues. So, investors shouldn't let the spin-off news distract them from metamaterials' foundational problems. Sure, spin-off news can be exciting sometimes. It could provide an opportunity to invest in a small but growing company. However, like television series spin-offs, company spin-offs aren't always successful. Besides, there are fundamental issues that metamaterials investors need to pay attention to. After the spin-off, metamaterials might be a slimmer company, but not necessarily a better one. Metamaterials, $1.90. What's happening with metamaterials stock? It's understandable if metamaterials investors are hungry for news, any news. Surely, they're looking for a catalyst to spark a turnaround as they've lost a lot of ground in 2022. Bear in mind that metamaterials stock started the year at around $2.83, so the shareholders are still in the red. As for the unfortunate shareholders who bought above $10 last year, they're definitely underwater now. So, what's the scoop with metamaterials lately? In a press release, the company announced its plans to spin off NextBridge Hydrocarbons. This divestiture has already been approved by metamaterials' board of directors, so it's practically a done deal. If you're thinking about getting in on the ground floor of NextBridge Hydrocarbons, you'll probably be out of luck. As it turns out, NextBridge common stock will not be a publicly traded asset. Metamaterials has a widening earnings loss. Metamaterials management might end up regretting spinning off NextBridge Hydrocarbons. The company has interests in multiple U.S. oil and natural gas properties which could prove to be quite valuable if energy prices increase. However, it looks like metamaterials management doesn't want to take full advantage of the potential upside in NextBridge Hydrocarbons. Meanwhile, they have to worry about metamaterials' financial situation, which isn't stellar. Sure, metamaterials can claim revenue growth during 2022's third quarter. Yet, as they say, the bottom line is the bottom line. Revenue expansion doesn't mean much if a company is bleeding money. For metamaterials, the bleeding is only getting worse, it seems. The company's $24.48 million third quarter of 2022 net earnings loss is more than double the figure reported in the year-earlier quarter. Moreover, metamaterials cash and cash equivalents balance dwindled from $46.65 million in 2021's third quarter to $30.61 million in the third quarter of 2022. What you can do now? A press release touting a spin-off can get investors enthused for a little while. However, let's not get distracted as metamaterials is facing a widening financial hole. You probably won't be able to trade shares of NextBridge Hydrocarbons on the stock market, but that's not even the main issue here. The focus should be on metamaterials' fiscal issues, and spin-off or no spin-off, cautious investors would be wise to avoid metamaterials stock.
Thanks for watching Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.